So with that being said, Brian, please, we won't take up any much of your time. The floor is yours.
Thank you, Gomez. Thank you, Amir. It's good to see everybody. I see some familiar faces again joining, so I appreciate it. I believe this is number 5 over the last few years of me speaking with the great HYPE community. Honored to work with some amazing startups within the community over the last few years as well. So again, Brian J. Esposito, CEO and founder of Esposito Intellectual Enterprises. And then on the next slide, we'll be going through my background, my company holdings, and some of the key points that we're going to be talking about. Something, if you can change the next slide. So again, Esposito Enterprises is my holding company. It's over 20 years of work now that I've built this. At the top level, it's wholly owned by me. Underneath it, honored to have over 95 companies. Those are companies that I've acquired, started, or merged with, either have whole ownership, substantial equity ownership, or majority ownership of. That reaches over 200 joint ventures around the world and proudly operating in over 25 different industries. So you can look at it like an amazing arsenal of what I believe are best-in-breed IP, technologies, products, solutions, and services that's run by exceptional management from the CEOs down to all the employees and team members. And then that's wrapped with, again, I hope best-in-breed and support from accounting firms, compliance, regulatory, legal. We even have a private security division that protects a lot of our key IP and key personnel. And then the other layer supporting that is our strategic capital partners, great investment banking partners, as well as private banking partners. So what I really think I've built is a whole world and ecosystem of just resources and great people that want to do good work. Over the last 5 years, and that's when Amir and I started working together when I joined HYPE, is to take what I've built and I get invited and work with startups, even up to Fortune 500 companies, and we create value. I'm not the unicorn guy. You don't ever call me and say you want to build a unicorn. We work together on building a business. If you're going to be in business, I strongly believe you need to generate revenues. If you want to stay in business, you got to generate profits. So what I like to do is take what we've built, take all of our holdings, and any of you companies that's on this call today, and hopefully we can talk about some of the strategies, is what am I holding that makes you more valuable? So that's key. If you're out raising capital, how can I help you boost your valuations? How can I create some excitement and momentum around you? Now, what else am I holding that can open up a new market for you, that can generate revenues that maybe you didn't think about, maybe relationships or access that you didn't have that can be used to open up those doors and get those deals in place, and also sustainability. Making a flash in the pan deal that can generate short-term interest may be exciting, it may get you some momentum, but if it's not a long-term plan and strategy that continues to grow and continues to fuel revenues that can continue to support your company's growth, those are the deals and opportunities that I like to bring together with the companies that I work with. And I work as a member of their team. I'm not an advisor type of role. I'm actually in the trenches with these companies, working with management, understanding the market conditions, understanding the CEO's visions and dreams or leadership's dreams and the culture of the company. The unique thing about what I've built in this model, there's not many like it, or really any that I've seen like it, is that I can be on both sides of the table. When they're my companies, it's my rules because my ass is on the line. But when they're other people's companies, I know what founders need to make it. I know the support that they need. I know the resources that they need. And I know the encouragement that they need to be able to continue to move forward because, as Amir said, it is not easy. Even if market conditions are great, it's never easy for a startup to get their flag in the sand, to get momentum, to bring on revenues, and to generate that excitement. I've been through every situation you can possibly think of, hopefully. So it's easy for me to speak with founders and help guide them in what I believe is the right strategy to do. You know, one of the interesting things about companies having my support is I also need to know when to take a step back, because in order to be what I believe a well-seasoned CEO or founder or senior management, you need to get some bruises. You need to know right and wrong decisions to make. You need to have some failures behind you, because that makes you well equipped to be able to know that you can handle anything. No matter what the market's doing, if it's up or down, should really be irrelevant to creating a good business model. Because in any market, in any business, whether the market or global markets are tanking or even a global shutdown, there are always an opportunity. You just have to find it. And you got to have the right people to open up the access to that opportunity. That's why it's so important to surround yourself with good people that believe in you and that will do anything they possibly can to help you succeed, because you've built and created something great that the market needs or the market should need. So that's a little bit about my background. I know Gomez has a couple of questions from maybe community members that have come in. And then again, best use of my time, and I believe our time, is I would love for the members on this call to message in questions, take your mic off and ask me questions. Use me while I'm here. Allow me to help you maybe solve a problem, maybe a situation that you're in that's real and reality, and then I can give you some insight or tips. And I truly believe that's the best use of our time together today.
Awesome. Thank you, Brian. And just to reiterate, to everyone on the call, if you have questions, just please raise your Zoom hand, or if you can't talk, just please type it into me. The more questions we have, the much more valuable this is going to be. So that's in terms of that. So Brian, the first question I have for you is, I would say is a specific area of fundraising, because fundraising isn't a word fundraising is a word that we're all familiar with, all of us on this call. Some of us have already fundraised, are currently fundraising, or planning to fundraise, whether it's post-seed, Series A, Series B, or anything like that. So the first question that I have to you is, what is the differentiating factor for a startup to successfully fundraise in this particular economic climate? Because I don't know, maybe 10 years ago it was easier, maybe 5 years ago it's going to be easier or harder, but for where we are now and where things stand in the way the market and the way the investors perceive valuations and everything right now, what are some of the differentiating factors with fundraising?
Case by case, so tough blanket answer, because it's a lot easier depending upon the company that's where they currently at, whether it's pre-seed, seed, or series round. But down to basics, it's always great to have a business pipeline in place. I've heard a lot of throughout my career, I've always heard a lot of companies say, we don't have money to pay a business development person, for example, or an advisor to come on that could really open up the world for a company. But they're paying, then the answer typically is because we're paying for developers to build our product, we're paying for engineers to build our product. So the money that they do have, or that they self-funded, or that they did come in, I always hear it's being paid to build the product. But in tandem, what should be also happening is that you should have people out there also building your pipeline of business. Investors want to see, or any capital, or your family that put in money, whoever may have helped you get this thing going, they want to know that there's hopes of a return. A lot of people may already say, hey, this is like going to a casino. This is money I'm giving you that I know I can lose. I hope you make it. But you should treat that money and that capital, and more importantly also your equity, like it's oxygen. And I've spoken about this a lot. Whenever you're going into the market for raising capital, well, there's that model, and there's also making money. So how do you differentiate your company and say, can we make money right now with what we have? Can we bring on sponsors? Can we go and find grant money? There's other vehicles and ways to bring in capital. So and I always say you can't be half pregnant, because if you're out raising money and you're out trying to do this roadshow and you're doing constant calls and you're trying to entice people to put money into the hopes of a business, that's very debilitating. And the mental health and wellness on that is very stressful. It's not easy, but more importantly, you're also not running your business or going after business opportunities, because you've got your entire calendar of pitches and going to VCs and showing this great idea of what you have and what could be. But what you should be trying to really articulate is, this is what we're building. This is the amazing team of technologists, developers, engineers, whatever your business is. This is what we're building, or this is what we've built. Over here, we have these great advisors that are helping us build a pipeline of business. We have the great business development guy or girl that we've brought on that's going out and finding opportunities. And together, here is our business of what's being built, and here's our pipeline of customers. You can always go out and try to find pilot programs. A lot of people don't think about going into big corporations and finding their divisions that help fuel innovation and say, hey, we have something that may be able to help your company become more profitable. We have something that could help your company become more engaged with the consumer or your enterprise client. Can you give me a pilot program? Sometimes if you just put guns on the table and ask, you'll get what you want. But you got to be humble about it. You got to be honest about it. And don't brag about how great you can be. Be realistic about where you are today, and let people see the genuinity about you of what you want to accomplish and that you need help. I always want to hear people that are honest about, hey, listen, I don't know what I'm doing. I need help. To me, that's somebody that I know I can work with because they're open to working with someone like me or an investor that really wants to be strategic about helping them. And I also don't think you should just take, they call it dumb money. I don't think you should take money for the sake of money. You should take money from either a firm or an investor or a VC or whatever it may be. That also part of that deal is they open up doors for you. They bring you business. They help protect the money that they're investing by de-risking it, by fueling you business opportunities that they know you can capitalize on. So hopefully that gives you some insight as to how I think companies should go into finding ways to raise capital and bring money into their organization.
Awesome. Thank you very much for that insight. The second question that I have for you is, fundraising is one thing, all right, after you have the money and, everything like that, but also, mismanaging those funds can also be something that can be detrimental, as founders. So the second question that I have for you is, what are some of the measures that a startup can take to ensure that they do not go down under?
You got to be very careful with every dollar spent. Even if it's a lot of money that you brought in, it can disappear as quickly as it got wired into your bank if you don't properly find a way to bring in capital and support that money. That's why the business development side and having a pipeline of customers or revenue channels is crucial. I've worked with amazing entrepreneurs that are vision focused, technology driven, and to an extent, I was that person up until probably about 5 or 6 years ago, where it's gotta make money. Otherwise, your great idea and your great hopes and your great dreams are never going to be accomplished. There's so many amazing people that just keep building. It's not done yet. It's not ready yet. We need more money to keep building. We need more money to keep building. Maybe that's fate and destiny and the right timing, and stars will align that when you believe it's finally finished, the market conditions are perfect, and the gates of heaven open up and you become the biggest company in the world. But if and when that does happen or doesn't happen, while you keep building, money's being spent and money's being drained out with nothing coming in. And you can't keep going back to the same well of investors and saying, we're almost there. We need a few more $1 million and we'll have our MVP ready, or we'll have our version 2 ready. It's just not fair to them and their tax earnings that they're investing into you, and it's not fair to yourself or your employees or your stakeholders. You need to get a product to market or products to market, or you need to have some ancillary business that helps keep revenues coming in. If you get a chunk of change coming in and you're someone that just wants to keep building, you may want to think about and police yourself and say, well, then maybe I should acquire a company that has revenues, because at least that'll help offset me constantly burning through money, because that's what I do. I'm a burner. I like to build, I like to spend money, I like to keep building. That's okay, because some of the best things in the world were made like that. But that does come to a halt when you don't have the resources to keep building. So you may want to think about acquisition, merger, partnering, or JVing with a company that has revenues that they can continue to focus on building new revenues with your company, with your product, with your offering. And again, it's case by case on how you spend money. I think it's great to have a controller in there if you're someone that maybe needs help, and it's okay to need help to how to control your money. You don't have to control everything. You can have people in there that really respect and honor the dollar, and they know where it should be spent, where it shouldn't be spent. And it's okay to have somebody within reason check you at times. And as an entrepreneur, you should be allowed to be checked, because nobody knows everything. And you should have people around you that want to keep their job. And the only way that they keep their job is if there's money in the bank. So they're there to help ensure that the money not only stays in the bank, but grows.
Awesome. Thank you for that, Brian, for that. And now the next question, that I have for you is, once you actually do acquire this fundraising as a founder, what are the best places to direct your money in your own company? Is there some parts of the company that's more risky now because of the current market, and some of them that are, I would say, more safe than others?
It depends on what's happening in the market. I don't like trends or fads, because if you're trying to capitalize on a quick movement, but you don't have the right team and resources there to get it to market quickly, then you'll not only miss out on that engaged audience, but you'll also spend money and resources and time that you can't get back. So, best use of capital, I always think, is always being used to, obviously, you need to build your product and update your product and whatever that may be. So, within reason, that's always got to be happening and always got to be managed. I understand that there's real cost and time associated with that, but you also want to be putting money into fueling business opportunities. That's why I think if you surround yourself with great advisors that are there to help you open up opportunities, the best ones probably have rate cards. They probably want to earn equity in cash. But if you get their full commitment and they actually give you full access to them and what they've built and their companies or their relationships, then having an advisor on your team that's a very low cost of capital and risk compared to an employee, and maybe giving them health insurance and benefits and certain ESOP equity programs. So if you surround yourself with really strategic advisors that are there to help you and help grow your business, and you gotta police them too. You gotta give them. You have 30 days to come back to me with something. I'll retain you. I'll bring you on. Here's your position. But if you don't bring me anything in 30 days, you got to go. So you have to, because you just have to be a squeaky wheel with people sometimes that aren't an employee, because you have to get their access and their time when you can. But if you're laying out that roadmap and that rules and that understanding on deliverables, I need you, advisor A, to be giving me A, B, and C over the next 30 days. I need you, advisor B, to give me D, E, F over the next 30 days. And maybe you spent 5, 10,000, whatever it could be, by bringing in two amazing advisors that have great access and credibility, and they ask for money. That's okay, because everybody's time is valuable and they should be compensated. But if they don't deliver what you ask of them, then there's got to be some recall on that. And if they understand going into that arrangement, if they don't deliver, there is recall, then they may open up $1 million deals for you. They may open up $100,000 deals for you. That's their job. And then all of a sudden you're building a business and you've put a little bit of capital out by bringing on somebody that has the access and credibility that you may not have.
Awesome. Thank you for that. And on that note, we have our first question for you, Brian. And this is from Shelly. She's from the company Devour. So she says, they've intentionally bootstrapped all the way up until this point to not raise until the product goes to market. So the question is there a too early or too late stage when starting to raise equity-based funding?
One more time on the question, Gomez. I'm sorry.
Sure. So they've bootstrapped all the way, until the product goes to market. And so the question is there a stage that is too early or too late when starting to raise equity-based funding?
So this startup hasn't raised any equity any rounds of funding at the current
Correct. Yeah.
stage. So it's
Bootstrapped all the way.
So founder funded, just on getting a product to market.
Yeah.
Well, that's painful. I've been there, Shelly, so I know that's not easy. You may, I don't know the offering, so I can give you some more strategy, but in your situation with the right strategy, you're kind of you're in a sweet spot, because you control what you want to do right now. If it's 100% owned by you, or you're majority owner, and you have a product going to market, you can be very clever as to who you want to bring on with you. You can say yes or no to people, depending upon how far this bootstrap situation that you're in can continue. I don't know about too early or too late, but I would suggest as far as you can take it without putting yourself or your home or your family at risk. Go as far as you can without raising money, because it's your brain that developed this. It's your desire. It's your passion. You're leading it forward without any other influence or stresses from investors that are calling you looking for money, bothering you about their investment, looking for their return, or whatever you may have structured as far as your investment round. So I would say, depending upon your risk tolerance and how far you can go, I would take it as long as you can go and be very strategic as who you bring on, and start signing deals. If you have a product going to market, build your valuation up. as much as you can. That's realistic. That's sustainable. I love partnerships. I live and breathe putting these win-win partnerships together that generate real value. So if you can focus on that prior to going into an equity round and really get your valuation up, I highly suggest bringing on a firm like Markham or a top tier accounting firm that can say your company is actually worth this, rather than a few people sitting around a table and saying, well, I think we're worth 10 million and we're going to go and raise 10, 100,000, a million, so we'll give away 10%. Not the right strategy. I guess the simplicity of that. I get that's just an easy way of doing it, but you may be way under what you're truly valued, or you may be way over what you're truly valued, and then when you need to raise more money, you find yourself in harm's way, either by diluting yourself out of your own company or having a down round, which doesn't give any confidence into your company. So I would suggest bite the bullet as long as you can, as far as you can, and keep owning and controlling your thing as much as possible. And then get a proper valuation done, and work with other companies or other opportunities and really boost your valuation before you give away or sell any equity.
That was amazing. Thank you.
Thanks, Shelley.
Thank
I
you,
need that
Shelley, for
I
the
need that sound
question.
bite after every time I talk. That was great.
Sure. So next, we're going to take the question from Alan. Alan, if you can unmute yourself, the floor is yours.
Thanks, Gomez. Hi, Brian. Thanks for this. We find ourselves in a situation right now trying to raise money where we're not sure how much we should be raising. We've tried, we're thinking maybe 500,000 gets us to our first couple customers. But if we go for 2 million, we can get to 10 customers. And we're just in this weird spot where we're getting a lot of different feedback and ideas on what we should be doing. And honestly, we don't really know where to go from here. Our product is ready to go. We do have a few clients, but we are still pre-revenue. We've been doing some demos and stuff like that. So do you have any insight on that kind of situation?
Yeah, and I appreciate the honesty and transparency. And kind of like I mentioned in Shelley's question, is I would go after, if 500,000 gets you 2 customers, I would go after that and go back to, okay, what do we now become having these 2 customers online? I don't know the extent of the return on that, but if it proves you in the market, it increases your earnings, and if those customers hopefully are long-term earnings generators for you, again, it goes back to now you are worth more money, you're more valuable, you have commitments in place, you have revenues coming in. So if then that $1.5 million that you may have left on the table, now you can go after that money to onboard the other 8. I think you said maybe 10 customers that you could get with 2 million. You go get the other 8 at a higher valuation and give away less equity. Now there's that, which I would do. Again, it all depends upon your risk tolerance and your current structure of your company. There's also the mindset, feed the ducks when they're quacking. If someone's going to give you $2 million, go get the $2 million. So going back and trying to get money is not always easy. But if you have the investors lined up that want to put money into you, and you can de-risk their capital by saying, we got on these 2 customers that return this. I also am a huge believer in yield and giving out distributions. If you see my virtual stacks thing here, this is a company we spent 5 years building. We have a historical financial history. We made history this week by announcing the first 100% yield generating or revenue sharing generating security token that went to market with INX this week with Turncoin. And we've spent, again, 5 years developing a legal, registered, regulated security that generates a monthly yield. I strongly believe the investors that I always want to approach or work with, and when I say investors, I also mean me as someone that's like Shelley, that's self-funding companies. I want something that's going to be the Berkshire Hathaway Class A stock that I never get rid of, that constantly generates returns for me, and I pass it down from generation to generation to generation. So while you're structuring your business model there, Alan, and maybe bringing on investors, you may want to start looking at paying the investors some sort of a coupon back, rather than there's a liquidity or exit event in 5 years from now when we're acquired. If you're showing a return for capital that comes in to these investors while their money's being utilized and used, they're more likely to come back and give you more when you need it, or they're more likely to tell their network and friends, hey, I gave this company $100,000. They're paying me like $8, $10, $12,000 a year, whatever it may be. That's a sound investment. You can't get those yields in the market on a guaranteed level. But in a private world with a company like yours that's raising money, you may want to think about things like, how do I take care of the money that's giving me my lifeline? How do I appreciate and show that money that I respect it and I wanted to make money? So in your business model, you may want to think about incorporating things like yield. So when you do have a 2 customer, potentially get 8 customer, show the 500,000 that came in that you really know how to make that money make money.
Great. Thanks a lot, Brian. Very interesting. Good thoughts. Cheers.
Thanks, Alan.
Awesome. Thank you, Alan. Next, we're going to take a question from Ankur from Bassin Sports. Ankur?
Hi, Brian. Thank you so much. And thank you, Gomez. I'm actually going to touch upon one of your specialties, which we generally don't end up discussing, which is about the crypto market, especially concerning your, I think, relation or your talks with the Turn Coin. So I have my questions split into 3. The first one is, what's your view of the crypto market in terms of as a business, and the second one is your opinion regarding ICO versus IPO. And the third one is, a lot of companies here are Web 3.0, and there have been, regulations regarding a lot of Web 3.0 companies around the world, especially because, the general perception is that, it's linked with cryptos. So should that be decoupled in the near future for the growth, or should it be continued as the way it is? Because the crypto markets are seeing a return. In the last 3 months, there has been on average 18% return on every single crypto. So those are my 3 questions. Thank you.
Thank you, Ankur. Great question. So I may need you to repeat them, but I think the first one you were asking me of what I think about the crypto markets in general and my involvement. So I've been involved since the inception of crypto, but not as an investor or speculator in Bitcoins, Ethereums, altcoins of the world, but as someone that saw it as a new medium for our own businesses. So it's adapt or die, building digital assets and tokens or cryptocurrency that could help support or stimulate a new project within a holding or create a community. That's what I really love about the crypto and NFT market, which we're heavily in. But in it, not in the gray area and say, oops, we're sorry. In it, in a way, working with regulatory. If it's a security that we're putting in the market, then it's a security. So that's why we work with regulators like the SEC. One of my other projects, we're the first of its kind, rolling out of the Dubai Financial Center in the UAE, and working with regulatories to say, hey, this is what we want to do. This is the company. This is the digital asset crypto offering that we want to bring to the market. How do we do it legally? If it takes a year, it takes 5 years, then we're going to take the time it takes to properly do it. And that's why it goes back to make sure you have incredible legal guidance and accounting guidance. You can look at the slap on the wrist that Kim Kardashian got a few months ago, $250,000 fine for promoting a cryptocurrency company. The family's worth billions of dollars, as you can just put together with all their efforts and work. Do you think she really would have risked it all for a $250,000 payment? There's just not the right education. There's not the right legal understanding as to what is the security, what is not, and all these projects are majority of them are fluff. They got these roadmaps that are unrealistic. They're just bringing in money. They don't have the right strategy, the right team to really complete what they want to do to market. So ours, again, our own companies, our own holdings, utilizing these types of digital assets in a fashion that's in tandem to traditional business. It's always got to have some sort of loop back. As far as the metaverse and Web3, one of my holdings, MetaLife, coined Web3 in 2003. We've been building metaverse environments and ecosystems for a long time, but if it doesn't loop back to moving product or pouring beer or getting a hot dog or buying clothes in real life, then there's no sustainability and there's no business model there. I think it's an amazing new way of engaging and connecting and communicating with an audience. But if it doesn't generate a return of some capacity, then it can't be supported. And the return right now is return in real life, utilizing Web3 and a metaverse experience, or these digital crypto communities that are amazing. Spending all day in Discord and communicating about a project doesn't generate money, but does that project have products in real life? Do they have some sort of content that you can drive them to that can generate advertising returns, or that can generate some sort of commerce? Well, there's a nice little loop, and there's a new way of utilizing this movement into Web3. So it's a very long answer to my involvement, but I'm not the speculator that's going to be buying cryptocurrencies in hope that they increase in value, or buying digital securities, which I believe is the right next movement. Security token offerings were up 14 times in 2022. Companies go through the process of being regulated, working with exchanges like INX and T0. Here's our offering. This is a security. It does generate a return for its investors, and going through the right channels and the right processes, that's the way you do it. If you don't do it that way, you're putting yourself in harm's way, and I don't think you'll be able to sleep well at night. So that's question one, but you have to remind me on question two, if you don't mind.
Thank you so much. The second question is ICO versus IPO.
STO, security token offering. That's where I want to be.
Sure.
And I suggest building a crypto token that has a utility, that has some rewards or perks functionality within your business model, is safe. 2017, the ICOs were on fire. They also all collapsed. Not having a real utility or real value. Same thing with NFTs. Our NFT projects have real values. We're calling them revenue-bearing tokens, RBTs. When you own ours, again, I don't want you to ever sell it. I want it to be the Mickey Mantle card that you never get rid of, that you pass down from kid to kid. So these things are backed by businesses, or backed by revenue-generating opportunities. Those returns or those disbursements are given to our holders. That's a security. That's a revenue-bearing token that we're coining out of the UAE. And in markets like the USA, security token offerings, I think, is the way you need to be. And I highly suggest working with firms like INX, like we've done with Turncoin, and properly launching a security into the market that can help fuel and support your business.
Thank you so much. And the third part was, like I said, that in a lot of countries there are unclear regulations regarding crypto right now, because of which certain companies have been moving either from, like, for example, I'm from India, and one of the biggest crypto exchanges here is WazirX, which has ties with Binance. And the founders have moved to Dubai because of the regulations that are not yet clear. So would your advice for Web 3.0 companies would be to decouple crypto for the time being and deal with fiat currency, or to progress as the way it is? Do you see a light there?
It depends on, like you said, which jurisdiction they're in. A lot of companies, as you mentioned, are moving to Dubai, Malta, Cayman Islands. Gibraltar is great for security tokens. Singapore is great markets that understand this as the future of money and digital currency. It's our future. So I don't believe you don't utilize it into your company or your organization, but just be very careful about what the claims that you're making, and understanding if it's a security or if it's not. It's very hard to regulate a Web3 or metaverse company if you're going to geolocate your audience and say we can only have community members from this region because our token or our cryptocurrency is legal, and you're alienating 90% of the world. So how do you grow and scale with that? So utilizing cryptocurrency, understanding if it's in the way that you're using it, understanding the legality is crucial. So I don't suggest decoupling it, because I think that's confusing. And if you're going to be building Web3 or metaverse related products in this market, then I believe you're dealing with an audience that want to see a crypto component, because that's your initial target audience. You're not getting the rest of the scale yet, which don't understand Web3. They don't understand cryptocurrencies. They don't have a digital wallet. And in order to onboard them, as this continues to grow, it's got to be so seamless that they don't even know it's happening. So decoupling it right now, I think, harms you because you're not focusing on your core audience that want that component. You just have to be smart about what you're saying and what you're offering and whether it's a security or not.
Thank you so much.
Awesome. Thank you, Uncle. Next, we're gonna have a question from Paul. Hey, Paul.
Hey guys, hope you can hear me straight. I'm off mute. A quick question, if I may. My company is pre-revenue at the moment, and we were unexpectedly approached, in fact, last week by a family office to position themselves as an investor, but but they emphasized also partnership in terms of network, R&D support and infrastructure and so on. Stuff that we need, stuff that's appealing. It needs, and it's an unexpected question because it was an unexpected approach last week. So my question, Brian, is do you have experience with family offices? Any thoughts on how they assist a startup?
Yeah, family offices are fantastic. I suggest getting great legal. I don't know where they are. If you can share what part of the world they're in, that would help. But just be careful. Some parts of the world utilize that term, and that's not legit. A family office would never ask you for upfront soft costs to cover contracts or to get the deal done. So just be careful if that is to become an ask at some point. There's a lot of very clever people out there that I think criminals are brilliant to an extent. The moves that they make to actually bring in money, and if they just use that to go and work, and they make even more money. But the tactics that a lot of people use to get people excited, to get them emotionally connected, and to think that something's real is just something to think about. And I'm not trying to be negative. I hope it's 100% legit. I hope they give you the world. And just be very careful as to make sure they are who they say they are. You can ask for things like a copy of their balance sheet to show their asset allocation and that they are liquid. You maybe contact a local law firm in the region that they're in to do some fact checking on them. Because it sounds like you said they approached you last week, maybe out of nowhere. So, if you're making noise out there in the market, that invites both good and bad. So I love getting excited over things, and I don't want to take any win from your sale. Just be very cautious and careful about the process. Control the process. Tell them you have your level of how you bring on capital, appear to be smarter and stronger than them, and just be very careful with the strategy, and don't give them any money unless it's in an escrow account with your law firm before they hopefully give you money and resources. So I hope that answers your question.
Yes, perfect. It's super advice. That just FYI, that comes through a trusted network, so that lends some tranquility to the thinking, and also just for your information, they happen to be Middle East based. Yeah, your advice is super. Thank you.
And just an aside, some of my trusted people put me in harm's way, so just be careful and keep me posted. I hope they give you a big check.
Thank you so much.
Thank you, Paul. Little lesson on trust there. Next, we're going to have James, please.
Hi, Brian. So we're based in Lexington, Kentucky, here in the States.
Nice.
So
got some Kentucky bourbon here. So
oh yeah,
perfect guy on the call.
Yeah. Anytime you want some advice on bourbon, hit me up. I know. I'll let you know. So we opened up our first fundraising round. Unfortunately, it was basically right before all the market action happened, and we're a pre-revenue company. We were going for our pre-seed, angel round, and we were having lots of great talks with VC firms. Things started happening in the market, and then their asks totally changed, and things started. A lot of it was we need certain MRRs to be hit first. And those are kind of where those conversations have led to. So I just kind of wanted to get your advice based on going through those market conditions. And now the asks are different on their end and saying, we want these milestones, which were not part of the conversations before, based on the financial, situation that a lot of these VC firms have kind of found themselves in the marketplaces. What would your advice be right now in renegotiating those? We have gone through, we've been very conscientious of the money we brought in. We brought in about 1/10 of the total raise before things started happening. And we've been securing pilot programs, doing those types of things, really starting to get to our first revenues, trying to turnkey those over. So what would you suggest as far as going back to the table, renegotiating with the firms to try to bring in the rest of them out?
Are these firms that already allocated capital to you, or they promised to?
They have, it's just talk and promises. They have not allocated capital to us yet.
Do you feel in your take the emotion out of it and the time spent if you can, do you feel like they would ever, or do you feel like you're running circles and wasting your time?
50-50. Many of the firms that we have been talking to in our location, our area, are not sports technology motivated necessarily. We're kind of something outside their expertise. We have been reaching out, to other firms that do have a history of financing sports technology companies. But so it is kind of 50-50. They're very much looking at what is just the business plan part of it, and not necessarily like you were saying, what type of pipeline and bringing partnerships together for you. What can they do? They're not necessarily looking at that from our opinion.
I understand exactly where you're at. It's a lot easier for me to answer you more comfortably if I actually heard them talk and picked up on their tone and some of the things that they're saying. So I don't have a crystal ball as to the legitimacy of it. I don't think you should ever backtrack on negotiating on the numbers, because if you already took in 10%, then you already kind of locked in your valuation unless it was a safe
Correct,
agreement.
yeah.
So you want to stay firm on that. You may want to go the pilot programs that you have in place, if they're with firms that or companies that have some substance, you may want to have a conversation with them and say, or their CEO, and say, hey, listen, this is what we're doing. Why don't we work together with their network or their investors and your current investors, and how do we fuel this program to be more successful? Let's bring in some money to support this. And then you may be bringing in working capital to help fuel it, opposed to giving away equity. And you could still have those conversations. I just think nothing should take that long. It sounds like these conversations could be over a year old with some of these VCs, if I'm not mistaken.
About 6 months.
Oh, that's okay. But if it go, I would give it. I mean, you can keep the relationship warm, but if you got something in motion and you got, like you said, pilot programs or business in motion with your company, I think you should divert your conversations and time to other firms that understand what you're doing. Trying to educate a firm that doesn't know your space, that takes a lot of time. And if they don't get it, confused minds don't close. So you may want to keep that door open and check in and give them updates and, kind of give them some FOMO about what they're missing out on, and that you'll still honor the original commitment, but you're going and growing, and you keep sending them updates on new customers, new opportunities, get them to feel like they're missing out. That might be your best approach, rather than trying to convince them about your business model. And then try to speak with other firms, or I think your best bet is to be honest and transparent with who you're working with these pilot programs, and see how you can bring in some more capital.
Got you. Thank you.
Thank you, James.
Thank you, James. We're gonna have Chad next. Hey, Chad.
Yeah, I'm getting off
Chad,
mute. Hey, how you going?
yeah.
Thanks for calling on me. So this has been awesome, Brian. Thank you. I just want to say I'm actually Shelly's co-founder at Devour, and for important context here, we're a Web3/Web 2 company. We're bridging the two worlds, right? And one half Web3, one half restaurant. My question is, we're exciting product, about to come to market fully, moving from pre-revenue to revenue generating, and resources are tight. What is a good way to find, attract, compensate team members that would really help us grow and scale at this stage in our growth?
Are you US based?
Yes.
Okay. Do you have an ESOP program, an employee salary and equity package program in place yet, or not yet?
Not yet.
That might be your next step. I don't know if you have an accounting firm that you work with, but they can help you structure what that would look like. And
Okay.
having that in place rather than promising your employees, don't worry, we'll get it in place. That a lot of people have heard that, and then they're chasing their equity, and that's you want your team to trust you. And if you have a data room of your company, your due diligence, your ESOP program, equity packages, however you need to structure it, great way to entice people. But you know, equity also doesn't help pay their rent or get food on their table. So you got to also, before you even bring anybody on, I think it's really important that you're very structured as far as there is capital here for bringing on an employee for at least a year. I mean, and if times get tough and there may be an issue, I think you have an ethical obligation to tell that employee, you know, if it's not month 9 and something happens, hey, listen, we're in a little bit of a crunch here. We're going to do everything we can to bring in more capital, but after the next 3 months, I just want you to know we may be in trouble. You need to be honest with your team members. They need to trust you. And I believe that ultimately gets them to be, you know, loyal as hell. Honestly,
Yeah.
if they believe in you and they trust you and they believe in what you're building and they know that you are there for them and you're honest with them, I think you build an arsenal of team members that'll ride or die with you. But you need to build that foundation and that trust, and you should have some equity payment structure vehicle in place before you start to onboard people, just so they're not constantly asking you or bothering you, hey, when do I get my equity allocation? What does this structure look like? I think you should have that in place before you onboard team members.
Awesome. Thank you.
Thanks,
Thank you.
Chad. Shelley, do you have a question
I
still?
do.
Just
And
checking.
yeah.
Okay.
I promise we don't normally just try to dominate like this, but this has been an amazing session. Gomez and HYPE, thank you for bringing on Brian, because this has been so informative. So the question with that is, we'd love to take the advantage of the opportunity to meet with you or through the HYPE connection, how we can further take advantage of your expertise and whatnot. So I just wanted to ask the question, and this may be Gomez, this may be you, Brian, kind of how that works for those of us in the program.
Yeah, shall I just reach out to me? Everybody tends to send me messages after these discussions, and then we'll schedule some time to talk, and we'll see how and if we can do something together. So always open to talk with great people and companies.
Perfect. Thank you.
Okay, thank you for that. So with that being said, with 7 minutes to go to the session, first of all, I'd like to thank you, Brian. It's been such a wonderful session and always really great to have information that we've gotten. So thank you very much for devoting your time today. I don't know if you have any last words or remarks for everyone.
No, thank you, Gomez. I think Amir made a drop, but thank you. I see Sven on the line. He's always loyal to listening to my discussion, so good to see him. And anybody that thought maybe you had some more questions that you didn't ask, or something pops up tomorrow or a month from now, LinkedIn is what I tend to always love to use. So it's Brian J. Esposito, and also Twitter, Brian J. Esposito. So connect with me there. Shoot me a message. I respond back to everybody. And I wish you all nothing but great success. I like to say the harder the journey, the more rewarding the outcome. So I know at times it could be tough. You may think, why did I do this? But you're not alone. There's entrepreneurs and founders and startups all over the world that are battling the same fight that you battle every day. And then a lot of those same companies turned out to be Fortune 100 companies today. So there's always change. There's always great things happening, and there's always opportunities. Just be smart, take a step back once in a while and look at where the right place to take your company is, and surround yourself with good people that want to see you succeed. And anybody that is toxic or maybe negative around you, I'm sorry, it may sound cold, but you got to cut them like a cancer out of your life, because this is your heart. Founders, I get it. This is what you want to do. This is what you strive to do. And if people don't understand that, you can't convince them while trying to run your business. So you got to surround yourself with people that believe in you. And sometimes that's a hard decision to make, but it's the right decision.
Awesome. Thank you very much, Brian. Really, thank you for that.